Good morning, guys. So we are back looking at our journalizing in bookkeeping to trial balance. Now, what you will remember is previously in part one, we had a look at how you deal with the given information. I'm going to refer back to that just now. Also, in part two, we had a look at the debtors journal, the completion of the debtors journal. Then in part three, we had a look at the debtors allowance journal and the cash book receipts journal. And because I think you guys are now accustomed to the pace, in this video, I'm going to look at the petty cash journal. I'm also going to look at the general journal as well as the general ledger accounts that we are supposed to complete. So if we are going to do the petty cash journals, you'll remember that I said petty cash will be the petty cash vouchers that we're going to look at, and you will see there we have our first petty cash voucher 125, 126, 127, 128. It looks like those are the four. And then all I did, like I always do, is I went here to the petty cash journal, the tab that relates to the petty cash journal, and I just copied those four transactions as it was given. I put it down here. So this is what happened with regard to the dealing of our petty cash. On the 18th, there was a petty cash payment for filing trays, and the account there is office consumables. Then on the 22nd, there was petty cash payment for coffee, but that is staff refreshments. And then on the 25th, there was petty cash payments for pens, that is just stationery. And then, of course, on the 27th, the drawer took some money from petty cash. And the owner is entitled to do that, and that is what he did. So what I'm going to do here, like I've always done, is I'm just going to do the calculations here. In the case of the petty cash journal, you could skip this part of it and go directly to your journal, but I like to stick to the one format. So let's have a look here at what's happening here. So here we have the 2,610 Rand that is leaving petty cash. Okay. Now it is for office consumables, but our columns that we were told to use is postage and stationery, refreshments, and VAT input. So office consumables is not one of our main columns in the petty cash journal. So therefore, it will be a sundry entry, and then we set the account that it will reflect in is office consumables. And of course, we can put in the amount there, and that amount is the amount we were given divided by 1.15 to get the amount exclusive of VAT, because office consumables is just standard VAT, and then of course the VAT is just the difference between those two amounts. Okay, and it's 340. The next one was for staff refreshments. Now we see here that we actually have a column that says staff refreshments. So the amount that's leaving the petty cash is 378.20, and because of the staff refreshments, there is no VAT applicable, so we can just put the entire amount in there under refreshments. The next one is petty cash payments for pens. Now that is just postage and stationery. Okay, pens, stationery. So the amount that's leaving the petty cash is what we were given, the 137. Of course, stationery has standard VAT on it. So we, under post and stationery, we are simply going to put in there what it is that we get when we divide by 1.15, and then, like always, the difference between the two amounts, there will be our VAT input. Last transaction is where the owner takes money from the petty cash, so he can take the money. Obviously, we do not have a main column here that says drawings, so it will be under sundries. We are going to say that the entry is drawings, and we will put the full amount in there because drawings, there's no VAT on drawings. He takes money and he gives money. Okay, and now that we've done it, we can come here and we can put it, all those details can now be transferred to our petty cash journal. So document numbers we were given, so we can just copy those document numbers. We were given the dates, so we can just copy those dates. Okay. The details, we have the details there, but we might write it a little bit shorter. So I just said the detail there is office shop, the vendor. In this case, it was CP Refreshment Store. Exactly really what we have there. There's P&P Stationers, and there is J. Guzman. Only thing I've done different here is I actually said to you that J. Guzman is the owner, so that when you have a look at the journal, you will not be confused. Obviously, at this point, there are no folio numbers yet, because we were not told what the account reference is in the general journal. So we know for the first one, we're just going to put those amounts in there now. So petty cash, we said what it was, so we can just put that in there. Postage and stationery, it was really only the one entry. Staff refreshments was also the one entry, and then the others were for office consumables and the drawings. Those are the money that was taken by our owner. And then, of course, when we look at it, we say that office consumables will have a VAT input. And so the amount there is what left petty cash minus the VAT. In the case of refreshments, there's nothing to add because VAT is not allowed. In the case of our stationery, we've already put there under postage and stationery what the amount is. And we know that there's VAT on that amount. And when we add the two together, we will get to the amount that we recorded under petty cash. And then when we look at Mr. Guzman, we can just put the full amount there because there's no VAT. And I said to you, we would have been able to complete the petty cash journal from the outset. Now, please, guys, just remember, when you are this far, you are not done yet. Please remember that. So I was going to make this column better size. And then, of course, what you need to do is you need to total these amounts, because you get marks for it, and you don't want to forget that. So let's total these amounts. I'm just going to draw my cursor horizontally so that it will see all the amounts. This is obviously not columns where I expect a random amount, so I'm just going to delete those. Okay. So what do we do? This petty cash, okay, so it is money here that is leaving petty cash, which is a current asset. And we know that our assets increases on the debit side and it decreases on the credit side. So what do we know here? Just want to see how I just used the small caps. Okay. So here, let me put this in a nice little frame for you. Okay. So we know that we are going to credit that account. Okay. Just you want to see what no, CR and DR. Then all the other accounts, because they make up the petty cash, will be debited. So we are going to debit postage and stationery. We are going to debit staff refreshments. We are going to debit VAT. And here we are going to debit the individual accounts. And you can put that in there. Remember that these are all things that you get marks for. So you don't want to mess this up, because if you do all your calculations correctly and you do not fill this in, then you are going to lose these marks, and you don't want that. I mean, this is about it's about 8-9 marks that you could lose if you are not careful. Okay, just wanted to put those in little blocks so that it looks neat. Okay, guys, and that is how you complete your petty cash journal. Now, the next one that we're going to have a look at is our general journal. Now, remember, this journal doesn't look like the others. It looks a little bit different, and I'm going to show you that now. But here is what we were given. So once again, we could go back to the beginning with the given info, and then we will see that every time we have a journal voucher, that will be an entry into our general journal, and we use the yellow. But just to save time, I said to you guys, I've done this, or I've transferred the information that pertains to the general journal from the given information. So I just took the other lines out and I put all of them here. Okay. The important thing when you work with a general journal is from the outset, you must know which accounts are going to be debited and which accounts are going to be credited. Just do that. Okay. So first entry says that Jay Guzman, owner, he's contributing a delivery vehicle. Full amount of VAT can be claimed. So, okay, what do we expect there to be debited? Well, obviously, the vehicle, because we are getting a vehicle, which is non-current asset, so we can put the amount in there for the vehicle that is going to be debited. It also tells us that the full VAT amount can be claimed. The owner, obviously, he paid VAT on the vehicle when he bought it. Now he is donating it, so the input VAT must also be debited. And then what is going to be credited? Well, capital. Why capital? Because it is the owner who is making the contribution. Okay, so what do we do here is take the full amount under capital, because that is the value inclusive of that he is contributing. Okay, and then the vehicle will be that amount divided by 1.15. So vehicles are increasing with 67,500, and our input VAT is also increasing. So that is a nice way to get capital into your business, or really to get cash into your business, is if the owner goes and it donates or contributes an asset to the company, then the VAT is claimable. Okay, so that is the one with regard to the VAT. Now, what I was trying to do here, and now something went a little bit wrong, so let me just fix it, is every time I work with a line item there, I put the calculations for that in a little bit of a thicker frame so that you can see, okay, all of this go together. Okay, now we can look at the next transaction. It says on the 20th, we receive a 5% settlement discount. Account settled with a check for 28,790 and 89. Okay, so remember when this transaction was done, there was an amount that might be recorded in our cash book receipts, but not here. So basically, what is happening here? Okay, creditors control, because we are paying the account to Bowen Industry. He's a creditor of ours, so creditors control will be debited. Okay, And creditors control will be debited for a certain amount. I'm going to show you how that works now. And then the accounts that are going to be credited is the settlement discount and the output VAT. Okay, so just understand what is happening here. So when we initially received the invoice from Bowman Industries, we claimed the VAT on that as input VAT. And now we are getting a discount. So on that discount, we must pay output VAT. Okay, but now they tell us that we paid with a check. So how does that work? So what we know is when that payment by check was made, it was recorded in our cash book payment. Okay. And we have to ask ourselves, what is the amount that was recorded in our cash book payment? Well, that is obviously the amount given. Okay. Because we paid with a check for 28,000. But now we know that we got a discount, and it is a 5% discount. Okay, so if we want to know what the amount is that was originally outstanding, we have to divide that amount that was recorded in our cash book payment by 0.95. We're actually dividing it by 100% minus 95%, but you can just say divide it by 0.95. And then you will get the amount there that was originally outstanding. So what's happening here? We are owing Bowman 30,304 Rand, but he then gives us a 5% discount, and so we are only paying 28,789. This transaction was recorded in the cash book payment. Okay, what we are recording in the general journal is everything that relates to this discount. Okay, so how do we get to the creditor's control? Well, it is the difference between the amount that was owing and the amount that we actually paid. Okay, because that amount is now still showing on our creditor's control. Okay, and now we have to say deal with that, and we say, okay, so part of that, if we divide by 1.15, is our settlement discount, and the difference between those two amounts are obviously the output VAT. So SARS wants its share of the pie. We get 1,300 Rand discount. They want almost 200 Rand back from us. Okay, so now we have dealt with that second entry. Let's deal with the third entry. It says here that on the 21st, Jay Guzman, he made a drawing of trading inventory of where the selling price was 1,981. Okay, so that's a bit confusing because we want to know what is the value of whatever it was that he actually took. Okay, so let's have a look here. First thing we must do is we must calculate the cost price, because then we will know what it took. So the cost price here will be, look at the formula here, it will be the selling price divided by 1.15, because we have to take out the 15% VAT, and we know that we are working with 55% markup on cost, so we have to divide it further by 1.55. And when we do that, that's just the note there, we will get an amount here, and that amount is 1,111 and 96 cents. 86 cents. Okay, so, but now we have to ask, what are the accounts that's going to be debited and the ones that's going to be credited? So the one that's going to be debited is drawings. Okay, drawings increase on the debit side. But that drawing, we don't know what it is yet. Okay, because we know what the cost price is, but we haven't calculated the VAT. Now here, we will have inventory that is going to decrease, obviously, because it is taking from inventory, and the inventory is going to decrease with that amount that we just calculated there as our cost price. But there is also output VAT here. Okay, when he gives, like the capital there, that we could claim input VAT, but when he takes, we must pay the output VAT. And what will the output VAT be? Well, it will just be the inventory amount multiplied by 0.15 or 15%, because VAT is 15%. And then we get 166. And now we know if we add those two amounts together, we are going to get the amount that must be under drawings, and it is 1278.64. And now we dealt with the third transaction there. Okay, let's look at the fourth transaction. It says, O clerk, okay, he is one of our debtors, but now there is a credit loss. The amount owing is irrecoverable. And the balance at the beginning of the month was 11,620. So we know what our starting was. So if we want to calculate everything there that he actually owes, we will say we're going to start with a balance, then we are going to add purchases, we are going to minus returns, and we are also going to subtract any payments that we receive. But now in his case, so that's the general formula. But now in his case, really, he we only know what he had in the beginning of the month, and he went and he bought more stock. He bought inventory from us. He didn't make any payments. He didn't return anything. So the only thing that we will use is what is in the debtors journal recorded under Mr. Cook. Okay. And so that amount is then 84,210. Okay. So now we know the amount that was owing by him. Now we already know there's going to be an input VAT here, because in the previous question I said to you, if there are credit losses, we can expect that there will be input VAT. So our credit losses here is that amount divided by 1.15. Okay. Our input VAT will be the difference between those two amounts. And on the credit side, we have to put in debtors control, because in our books, we have to clear his account now. So his account as a debtor will be cleared with the full amount of 84 to 10.76. Okay, and now we dealt with the fourth entry. Then the next one is Candid Hardware Store. Okay, and they went and they charged us on an overdue account. Okay, now we should not be very happy when that happens. Now remember, once again, this is an interest expense for us, and so when there is an interest expense, we know that we can just put the full amount in there that we were given, because there is no VAT on interest. So that is what we put on that side there, the interest expense. And what do we credit? We have to credit our creditors control, because our individual account at Candid Hardware Store has now increased, because somebody didn't pay when they were supposed to, and now we are paying interest on that, and the amount will be exactly the same. Okay. And they put these two directly under each other so that we can understand. So there, Candid Hardware charged us interest. In the next one, we are charging Mr. F. Oppel interest. So what is happening here? It is an interest income that we have now. And same argument, we can just use the amount that we were given. So that's interest income. This is obviously debtors control. And we put the same amount there, because there is no VAT on interest account. Then we see, so this is a very nice one. Then we see that we gave Mr. V. Nelson an 8% settlement discount, and it actually referred to duplicate receipt DR 602. Okay, so we have to refer to that, and that is telling us that there was movement on his account from the beginning. Okay, so we must calculate the amount that he owed us. Okay. It is the amount that we received divided by the discount percentage, 100% minus the discount percentage. But that doesn't help us yet. So first thing that we have to do is just look at the accounts that is applicable. So we give a discount. If we give a discount, we know that we will be able to claim input VAT, because for us, giving somebody discount is an expense. Okay. I just want to see what I did here. And then here, the one that is credited is, of course, our debtors control account. Now, let me just see what I did here. Sorry, guys. I must just see what I did. Okay, firstly, let's just quickly go back, because this is what you will have to do. We look at Mr. V. Nelson. So let's just go and look and see what happened. In our debtors journal, did we sell anything to V. Nelson? Yes, we did. See there, it appears. The 59,934. Okay. Debtors allowance. Did he return anything? Yes, he did. He returned stock to the tune of 2,397. Okay. Obviously, he's not going to feature in our cash book receipts because he's a debtor. And then here in our petty cash, we might go and look and see if he features. He doesn't. Okay. So what we need to do is we need to calculate the amount that he was owing. And when we do that, it is equal to the amount received divided by 100 minus the discount. Okay, so we say, we look at our cash book receipts, because that's the reference they gave us. Remember, I go and look at DR 206. So let me just go and look here at my cash book receipts. Here it is. He paid us 65,062, and we know that that amount was enough to settle the discount. Okay, so when we put in that amount, we say we go and look at that, and we are going to divide the amount that he paid with 0.92. Why? Because he is getting an 8% discount. So he's only paying 92% of what he owed, and therefore we divide by 0.92%. Okay, and then we get an amount here of just over 70,000. Now, that is the full amount. What am I doing here? Sorry, guys. Okay. Now, when he made that payment, it was already recorded. Okay, the amount that he actually paid was recorded. So now what that we have to calculate is what discount did we give him. Okay, so we know that he paid only, let me just go there again, cash book receipts. We know that he only paid 65,000, and we now know that he was owing us 70,000. So to get to the amount that a physical amount of discount that we gave him, we have to subtract what he was owing from what we received, and we see that that is 5,657. Now that is the amount that would still show as outstanding on his individual account. So we want to clear his account because he settled it, and so therefore the amount under debtors control will be that 5,657. Okay, we are going to divide by 1.15 to calculate the discount, because initially we paid VAT when we gave him the invoice. So now when we give him a discount, it's an expense to us, and we are going to claim the input VAT on that. Okay, two amounts make up the 5,657. Now we can go and look at our last transaction here, and it says office equipment of 6844 in February 2019 was debited to office consumable. Okay, so what do we know? It should have been debited to office consumables, and it was debited to, it should have been debited to office equipment, yes, but it was debited to office consumables. So we want to fix that, and that transaction must actually disappear almost from office consumables. It must be made to naught. So if office consumables was debited in that month, now it is credited. We put in that amount. There's no VAT implication because the VAT will still stay the same when you recorded that transaction in the previous month. And the office equipment amount, you just put the full amount in there. Okay. So here they are just trying to catch you with a question mark so that you might think there is VAT applicable, but there is not. Okay. So now that we've calculated all of that, we can go and transfer this information to our journal. Okay, so this is our general journal. So we say, okay, we know that vehicles and input VAT was debited. We know that capital was credited. So just put all of that in here. Okay. But the only thing that we're going to do in addition to what we did when we did the calculations there is we put down here a little reason. So now see what's happening. Everything that's debited there, that was debited there, we put next to the line in the details column. And then whatever was credited, we offset that by a little distance, just so that you can see what's next to the line was debited and what is credited is a little bit indented. Okay, so then we can go to the next one, where of course we have the document number and the date it was given. We can just bring down all the information that we had already there. Okay, so this we calculated already, and we must put our reason, and the reason is that we received a 5% settlement discount from Bowen Industries. Next one, the document number and the date, of course, was given. There, the third transaction, we calculated everything and we said what is debited and what is credited. So we are just transferring it to our journal again. And then, of course, we must put the reason in there. And the reason is that the owner took the inventory with a selling price of 1981. Next transaction, it's getting boring. We're going to do it. The document number and the date was given. We calculated this already, and then we said, sorry about that, then we said what is supposed to be debited and credited, and here we just put down the reason. Amount owing by O. Clark was written off as irrecoverable. Next one, we are given the document number and the date. We did the calculation, not that it was needed to do a calculation there, but it is just the amounts that was given. And here we give the reason, Candid Hardware, they charged us interest. Next one is where we charge the interest, remember? So we just bring the information that we calculated up there into our journal, and we put down the reason, interest charged to Mr. Oppel. So interest charged by a creditor, interest charged to a debtor. Okay, last two transactions that we have here. Obviously, that is given. We did the calculations here. So I'm just transferring it to the debtor, and we put a reason there. We gave Mr. Nelson a settlement discount. In the last one, that information is given, And of course, that is just a reversal of that transaction. We did it up there, and we just put down the reason, and the reason is correction of error. Okay, and then you have completed your general journal. Okay, and the general journal is the one that counts the most marks, so make sure that you have enough time to spend on the general journal. Okay, now let's go to the last part of this question, which is the general ledger. Now, you are not asked to complete the entire general ledger. You only have to do it for two accounts, namely the sales account and the sales return account. And now they tell you here that the sales account, the opening balance at the beginning of the month was 503,000. So the beginning of the month, the amount that you brought down from the previous month, and now you won't have a folio number there, but there will be folio numbers in the others, and it is just the amount that is given there. Okay, so there are certain things that will increase your sales account, obviously. This is now at the end of the month, because this is the end of month procedure. Your debtors control will increase your sale, because that's just the people that bought on credit. And where did we find that? Well, we found that in our debtors journal. So we say debtors journal, the debtors control is the contra account. So if we go and we look at our debtors journal, here we have a amount here that says sales. Now remember, you are dealing with the sales account now, okay? But you are recording everything that it is, all the contra accounts as well. So you're not going to put the 209 in there. You're going to look for the word sales, because that is the account you are working with, and you will then put in that amount, the 182. Okay, let's have a look at that. See, it's the 182. Another thing that will obviously increase your sales account is the money that goes to the bank for your cash sales. So in your cash book receipts, that's the way you are going to find that total. Okay, and that total for cash book receipts was 138. Let's go and look at cash book receipts again. So in your cash book receipt journal, you are going to look for the column that says sales, and then you are going to copy that total to your general ledger. Okay, and those are the only things that can affect our general ledger on the credit side. What happens on the debit side? Well, at the end of the month, if we look at our credit losses that was recorded in our general journal for Mr. Nelson, that amount can be seen in that general journal. So let's have a look in our general journal when we had our credit loss. Okay, the input VAT and the debtors control was there. So that is the contra account. Obviously, this amount must reflect here. So it is the 73,226 that was in my general journal. So yeah, sorry. Please don't use the creditors control amount. I was wrong there. Obviously, you're going to lose your credit losses amount. Okay, so that's the amount that is going to impact on your sales account. Something else that will impact on your sales account is if we give discounts. Okay, and we did give discounts, and we also find that in our general journal. So look at the general journal where we gave the discount. Here we have discount given. And of course, it is that amount that we are going to subtract from our sales income, not the debtors control. That will reflect in the individual account. So we're going to work with that amount. Okay. And that is all that we have. There's nothing else there. So what do we do then? We total it on the side where we are expecting the most, and we bring that same amount, we just copy, and then obviously here we're just going to say at the end of the month we have to balance that transaction, so we carry it down and we subtract those two amounts from the 823, and now that will become the amount that you will bring down as the balance in at the end of April, but you can leave it like that. Okay, looking at our sales return account. Okay, so we know that there was a balance at the beginning of the month. They give us that, and the thing that will influence that is obviously everything that we recorded under sales, under the sales column in our debtors allowance journal. Okay, let's go to our debtors allowance journal. So there we have sales returns, the 6175, and when we go to our general ledger, that's the amount that we calculated. Okay, there is nothing else there, so you can just put in the 66,569 there, put the same amount there on that side, and then obviously we will need to balance that account. Okay, so we carry it down. There's no folio reference there, and it is the 66,569. That's just because there was nothing that happened on our sales returns on the credit side. So you're going to take the 66, and that is the amount that you will bring down at the end of April. And so you have now completed your petty cash journal. You have completed your general journal, the one that counts a lot of marks, and we posted and balanced the following accounts in the general ledger: the sales account and the sales return account. Okay, guys, and now you should be more than able to do this question in a test or an exam. Now, remember, in this case, we are working with a company that makes use of the Perpetual inventory system, and the markup is on cost, and we worked with the debtors account. Okay, so this reflects the accounts that we and the journals that we worked with here are more the journals that relate to our sales and really not to our purchases. That will be different. Okay, thank you, guys. Hope to see you in the next lesson. Thank you.